Hello, Maverick traders, and welcome to today's currency recap. So it was a happy day overall for equity markets. The S&P put in a strong showing, closing the day up just over 2%, and the total world stock index managed to close a little over 2% as well. Cryptos held kind of steady. There were some outsized winners in crypto, but Bitcoin traded more or less sideways for most of the day. Gold fairly flat, and oil having a little bit of a pullback here. So the market rally continues to build steam. The real question everyone's asking is this simply a bear market rally, or have we found some kind of true bottom? I don't have the answer to that question quite yet. All right. And I think, this is a thing that gets overlooked in trading and market forecasting all the time. You don't have to know. You don't have to be able to say, I have the answer as a great trader or a great market analyst or forecaster. What you have to be able to do is say, based on the information at hand, this is the conclusion I can come to. And sometimes those conclusions are fairly or relatively definitive, and sometimes those conclusions are a little bit murky. And I would not say that right now, based on the information the market's given us, that the picture is like completely messed up and impossible to decipher. But nor will I say that, I have a high degree of certainty in making a call on this being a real bottom or not. What I will say is that we're trading back inside a broken support level. And what was once support tends to function as resistance. We can see that there's moving average pressure up above in the S&Ps. And so far, this rally has not, disrupted the series of lower lows and lower highs that we've seen in the market since more or less the start of April. So I can't tell you definitively that we've found a real bottom yet and that the markets are headed towards new all-time highs. I definitely can't say that. What I can say is that this rally is building steam. It's probably got a little bit more to go, but we're going to get a real test, I think, as we trade back into those shorter-term moving averages. So whether or not the market's going to roll over and we're going to get fresh lows remains to be seen. But I think it's getting to a fairly dangerous point where if you're long equity markets, you should be thinking about taking some off the table or tightening up stops at the very least. And it's not a too dissimilar story in the world stock index. Here I've added a trend line, and you can see we're basically up against that trend line right now. The broken support level is a little bit further ahead, somewhere between 93 and 94 is the range, and that comes in with moving average pressure as well. So global equity is definitely not out of the woods, and similar to the S&P, the total world stock index also has not disrupted the series of lower lows and lower highs on this price chart. So definitely not out of the woods yet. And over in crypto land, I can see here we've taken out this trend line that I've told you guys to keep an eye out for. The reason I have the relative strength index, the RSI, up here is because you can see we've got an oversold. We've started to trickle out of oversold territory, but this doesn't really look like anything remotely resembling a fierce rally at this time. So my hunch is that this is definitely going to be a bear market rally in cryptos, at least based on the action we have so far. It's possible we go up to test that trend line, which looks like it comes in around, 37 or 38,000 on this price chart right now. That's definitely possible, but until we break above 48,000 or 52,000 on this basket, we have to say that cryptos are still in a bear market. All right. Now, if you look at the relationship or the correlation between equities and crypto, yeah, that doesn't really bode well for equities if crypto is kind of a leading indicator here. I'm not saying that's the case. I'm just saying, based on the information that we have at hand, that's not the wildest conclusion you could draw. Now, in terms of the market outlook, we're still below both moving averages, but the slope at least of the 50 is starting to taper out, and we've had a great update today. So I'm going to give this market a -1 for the time being, but that could change very quickly back to a -2 or a -3 if we roll over in the next couple days. Now, in terms of the weekly calendar for currencies, we've got some pretty big stuff coming up ahead. We've got inflation numbers coming out of the UK and Canada overnight for the UK, tomorrow morning for Canada, and then tomorrow evening we've got some big Aussie news. So the pound, the Canadian dollar, and the Australian dollar, they're all definitely on my watch list. All right, not to mention how on Friday we've got parliamentary elections in Australia. So a lot of Aussie-related news to keep an eye on. I'm not quite sure how the parliamentary elections are going to influence short-term volatility in the Aussie. So I will I'll probably stick to very short-term trading in the Aussie, just in case there's some unexpected volatility. I am not going to be spending my time doing some deep research on Aussie politics. So I'll be keeping an eye on the price action for sure. And I'll be looking to trade the employment reports. And if there's some good momentum coming out of those employment reports, then cool, we can hang on to a position, we can tighten up stops, and basically have a lottery ticket, right? That's not a terrible situation to be in. I call it a lotto ticket because, if you can make it a risk-free trade and you're playing with the market's money, then, whatever happens, it's either going to be a big win or a break-even trade, and I'm okay with either outcome. So that's kind of my plan with regards to the Aussie. Now, getting into some deeper currency analysis, first up, we've got cryptos. So like I said, there were some outsized winners here, Litecoin and Bitcoin Cash, and I guess Solana and Cardano to a lesser extent. And you can see, Bitcoin and ETH, yeah, sure, they're up 1% and over 1.5% in the case of ETH, but not particularly impressive gains considering the pain that crypto suffered over the last week or so. The pain's been the most acute over the last couple of weeks. So overall, it's hard for me to get excited about the crypto markets right now. I think, it's tempting to get in and bear in mind, I'm speaking to you as a trader. I have my trading hat on, not my crypto hodler hat on, which I'm not a crypto hodler. I do have some crypto, but again, it's a lottery ticket. So in terms of from a trading perspective, it's hard for me to get excited about crypto right now. It's just, I see Litecoin up 7% on the day. It does nothing for me. If you want to ask me some more pointed questions about crypto and what I see, feel free to send some questions my way. But I'm just saying, as of right now, I know it looks like an exciting day for Litecoin and Bitcoin Cash, but there's nothing in those price charts that makes me want to trade either of those cryptocurrencies right now. Moving on to fiat, it's a little bit of a different story here. The yen was definitely weak today, and last Thursday when I did my currency recap, I was talking about how I'm looking for yen, a little bit more yen weakness, and then to see those commodity currencies roll over and the yen to pick some steam back up. I'm not saying that scenario is completely out the window, but the yen's just been weak, so I haven't seen a suitable bear market rally to trade as of yet. All right. But it's interesting. That's a fairly big move in the yen. It's worth keeping an eye on. US dollar definitely pulled back a little bit today as well. The European currencies made a comeback. Biggest winner on the day was the pound, followed by the euro, then the Swissy, and the Canadian dollar stayed flat. And then the other two commodity currencies, the Aussie and the Kiwi, put in respectable showings. So in terms of velocity, there isn't too much to get excited about. I like the idea, just based on the velocity tables, taking a look at the pound and the yen. So as we get into some currency trades here, I'll show you what I've got going on. All right, so first up we've got cable. Okay. I think cable's an interesting case because obviously we've put in a low. There's a nice engulfing candle set up here. And on the momentum indicators, we can see how oversold the pound was. Sharp, bullish divergence. I'm not convinced by this rally. All right. A key thing for me is I need to see the market take out prior highs. So I'm not really going to get too excited by the pound until we start taking out some prior highs. And there's one here that comes in around 126.40 or so. Looking at this on a shorter term time frame, we're trading above the 20 and 50 period moving averages. Look, it's not my trade, but if you told me that your plan was to wait for a pullback to these highs perhaps and look for a pullback kind of setup, I wouldn't look. I won't argue with you. That's sound logic. It's just not my trade. But because the chart is quite compelling in some ways, especially on the shorter time frames, it looks like we have a decent. If this just keeps trading sideways, we get a decent base here. That might not be a terrible setup. Now, just keep in mind we have those CPI readings coming out overnight. Okay, so I probably won't be trading the pound unless there's just something really, really promising that sets up sometime between now and let's say midnight Eastern time. I'm not going to stay up till 2 a.m. for the inflation numbers coming out of the UK. But if you are up at that time, then you could potentially find some volatility in the sterling crosses. So that's cable. Moving on to sterling yen here. Okay, so sterling yen's a little bit different. We took out this high. We're trading barely above it right now, and there's a lot of other highs in the way, but it's slightly different in that sense just because of how much weaker the yen has been. If you're into trendline breaks, there's a long-standing trend line going back to mid-April, long-standing for the hourly chart, going back to mid-April that got clean taken out. So again, if you're looking to trade the pound or go long the pound, I think pairing it against the dollar or against the yen, not the worst ideas, but I'd wait for pullbacks. It is possible we just get a base here in sterling yen as well, so keep an eye out for that too. Sticking with our theme of a weak yen, I've got Aussie yen and Canada yen here. So on the 1 hour chart, look, we've pulled back in the 20 period moving average. There could definitely be potential for a long trade here. The only thing I'd be cautious of is this prior high coming in. Okay, so that's a little bit above 91.50, so there's definitely some room for this trade to run. And if we take out 91.50, then I'd be looking at 93.50 to the 94 handle up above. So there's definitely some potential in Aussie yen. And on the other hand, I'd keep an eye on this trend line. If we take out this trend line and hold below it, then I'm going to call this whole thing a bear market rally, and I'll expect at least a test of these prior lows around 87.50. And it's not too dissimilar story in Canada yen. It's almost the exact setup as you can see, and here's basically the trend line in this currency pair. So long as we stay above this trend line and above these moving averages, I'm going to look for higher in Canada yen. Ideally, here's the only tricky thing as far as the techs come in. All right, we've got some overhead broken support, which is now turning into resistance. Ideally, I'd like to see us kind of go sideways here, bust out of it sometime in the relatively early Asian session, or early New York when New York opens, and then look to get positioned ahead of the Canadian numbers. That would be a dream scenario. It's what I'll be looking for. Unless I get that dream scenario, I'm not going to be playing Canada yen. That's just my rules for how I trade news-based volatility. Now, here's an interesting chart, Euro Sterling. Okay, this should be a relatively lower volatility play if you were looking to play sterling strength. It should be easier to carry than something like sterling yen, okay? But, I gotta say, it's a little worrying to me. There's a lot of congestion here. I'd be wary of shorting this just because of all this mess, just because of how we bounced off the 50 period moving average on the daily chart. But if sterling starts to break down again, there is room for the euro to catch up, and we could see a trade back to 86. So going the other way now, like if the pound weakens considerably, especially in the face of that news event, Euro sterling's a relatively lower volatility cross that I'd have my eye on. So that's what I've got for you guys in terms of potential currency pairs to be keeping an ite out for. Oh, sorry, I'll go over another one, sterling Aussie. Okay, so the Aussie was relatively strongish today, but what I love about this chart here, I mean, look at that. We broke down from here and it's served as resistance ever since. So if we fail up here another time, I'm very confident we're going to get a retest of 172. So that would be great. Lots of pips to play for. And similarly, if we break out, then I think we're going about just below 182, maybe 181, 60 or so. So either way, I think there's some decent opportunities for playing sterling Aussie, either to the long side or to the short side. My hunch, I know this is weird to say, or you know what, I'm not gonna say I have a strong view one way or the other. I'll just stick to the facts here. The one thing that I will say worries me about this resistance level again is, look, we do have some RSI bearish divergence here. As prices traded sideways, the indicators started to slowly slope down. But you can see, if I draw a trend line here, we kind of poke through it, and the MACD is sloping up too. These are the two momentum indicators I look at the most. So that's what I'm saying. Gun to my head, I couldn't tell you which way this is going to go, but I think either way there will be a decent sized move. I think the reversal lower would be pretty sharp, and you have to be a little bit more patient with the breakout because it could be a false breakout. So if this does break out, I'd really want to see us stabilize within this area here before we start heading out to 181.60 or so, 50, 60. All right, so that's, and we're just going to go back to our wrap up here. So in conclusion, this doesn't quite look like a capitulation bottom to me. I don't see the blood in the streets, really. Look, I know we've had big moves in equity markets to the downside, but anecdotally speaking, everyone I'm talking to is like, when do we buy the dip? When do we buy the dip? That doesn't scream typical capitulation bottom to me. That being said, weirder things have happened. So bottom line is I think right now this is a trader's market, meaning you should be nimble. You should be prepared to play both sides. And I wouldn't expect strong follow through in currency pairs where you have just the yen staying weak for days on end or the yen staying strong for days on end. I would, my advice is to take a slightly, at least this is what I'll be doing. I'll be taking a slightly shorter term approach to my trading here. And I'm not going to overstay my welcome in basically in anything. So that's what I've got for you guys. And I look forward to seeing you next week. Happy trading.